What's going on, my stock market bulls and bears? I'm your host, Terry, and welcome to my channel, baby, by the dip. Guys, we're here. You asked for it in yesterday's video, and I'm delivering it to you. I told you guys I have the premium Spotify version. And here we got the interview from the Wall Street Resource on Spotify. As you can see here, the podcast episode. This was just yesterday, July the 9th. This is exclusive. Going to be the first to bring it to you here on YouTube. Meta Materials, MMAT, Dr. George Palikaris, and CEO Ken Rice, the CFO. So super excited. We got a 30-minute interview, so buckle down, get yourself a drink, get some snacks, and listen. I'm gonna take notes during this interview because I'm listening to this the first time as you guys are hearing it. We're gonna take some notes. We'll pause throughout it, and we will make comments as we go. So let's get to the interview.
Welcome, everyone. This is Jeff Cohn with the Wall Street Resource. Joining me is Dr. George Palikaris, and he's the CEO, and we also have Ken Rice, the CFO of Meta Material, Inc. Good morning, gentlemen.
Good morning.
Good morning.
So you guys are recently public. Ken, can you just touch on that? And then George, just after that, give us a quick overview of the company.
Sure. We are very recently public. We did a reverse merger with a company in Texas called Torchlight Energy Resources. It closed on Monday, the 28th this week, and we started trading on the NASDAQ under the ticker MMAT. Leading up to that merger, we were able to put a fairly large chunk of capital in the bank, so we're coming to the NASDAQ market with a newly public company on NASDAQ, a balance sheet that has just around $160 million in cash, virtually no debt, and a fairly optimistic outlook for the future.
Great. And George, so tell us what you guys do.
Thanks, Jeff. Meta Materials is a developer of high-performance functional materials and nanocomposites. So today we design and manufacture these materials not only with more sustainable ways, but at a cost that is significantly less than the competition. Our industry is typically in the semiconductors, broadly speaking. And as you know, semiconductors are not very scalable materials. They cost a lot of money because they are typically rare and scarce materials. We figured ways of making these complex structured materials thinner, typically a tenth of the thickness, using commodity materials like copper and alumina instead of rare earths. So that gives us an edge over our competition, making us not only cheaper, but better in many different ways. Our products are designed to basically create opportunities in multiple industries, from aerospace, which is what we started with, collaborations with Airbus and Lockheed, for example, moving on to automotive, consumer electronics, medical, and even energy, where we are focusing our next generation products. We offer these capabilities as an enabling technology to all these different industries.
Okay. And so you're in a space where there's got to be some very large competitors. Can you give us an idea of the competitive landscape and how you fit in and what your advantage is?
Absolutely. There are not just competitors out there, but there's also mega trends, which I will hopefully touch upon during this presentation. On the competitive landscape, we have very few direct competitors in Meta Materials. Meta Materials as a group of, as an emerging industry group, Meta is the only platform technology company. The others are more narrowly product focused. When you look at the broader field, we actually, in the first 5 years of our life, believed that the competitors today would actually be our suppliers. That was 5 years ago, where we worked with very large corporations that were in the semiconductors and the large chemical industries. However, what we found was that at the time, the semiconductor companies offered the design performance that we were looking for, but at a very high cost, typically $100,000 per square meter. On the other side, the chemical industrials, they offered you more cost-effective solutions, very large quantities. However, they didn't offer you that semiconductor precision. So our design process required both, so both scale and low cost. So 5 years ago, we invented our own tools that offered semiconductor accuracy at kilometer scale. Basically, if you think about the competitive landscape, on the semiconductor side, you have companies like Applied Materials, JDS Uniphase, and many others. On the chemical side, you have the large chemical companies like 3M, DuPont, BASF. And we do use raw materials, so we enjoy having supplier relationships today. But we invented things that not only were higher performing, but they were more sustainable replacements for incumbents. One example is indium. Indium is used as a transparent conductive material. And we came up with a product called NanoWeb that is offering more conductivity, more transparency at a fraction of the cost.
Okay. So I'm a little confused. Are you going to be selling tools and...
Guys, just a real quick update. We got a lot of information there in that 5 minutes, but a couple quick notes that I did take down from George and Ken there. Good thing, as we know, they're setting Mmat Materials $160 million in cash, and they have no debt. They're looking at a very bright future. Very, very key stuff there, guys. Key stuff. Also, they're using copper and aluminum to do their semiconductor stuff. That will save them on the cost of the materials, hence Mmat Materials. It all kind of makes sense. They've been working on this for 5 years now in the semiconductor space, and they now got the NanoWeb, which we did cover that before in the channel. So if you're not familiar with the NanoWeb, go to their website and check it out. But we may cover it further in this interview. Let's get back to it.
Materials, or you just use those tools for yourself?
So we initially started inventing these tools to enable our customers who were in the aerospace business. However, as the company has very large goals, we realized that in order to grow fast, we had to open up our platform to certain industries that wanted very large quantities. For example, in the solar industry, there are companies that produce 1 million cells, solar cells, per day. These are moderate numbers. So even if we had our own system to scale, there would only be enough for just one single customer account. So we decided to use, for very high volume opportunities, think about 100 million meter square plus per year, and offer our technologies to the right OEM forging partnerships and growing further partnerships with companies in several of these categories. So energy is one, and there's automotive and a few others. However, what we are doing today, we are scaling roll-to-roll high-volume production capabilities up until a certain level, so up till 10 million meter square. Anything above that, it becomes an opportunity to license and create additional revenue streams from royalties, material supplies, equipment manufacturing, etc. So we are kind of a hybrid business model.
Okay. And then it sounds like you're developing everything in-house. Is that correct?
Not exactly. We have designed everything in-house. We're a technology company. We have tier one contract manufacturers in Europe and the USA and Japan who are helping us with their expertise scale our production tools and then getting them ready for licensing opportunities downstream. So we prove the concepts in-house. It's our own designs after all. Showcase that it's manufacturable and scalable up to a certain volume. And then our partners and tier ones, they also make great upside alongside our partners.
Okay.
All right, guys, real quick pause on that. A lot of information there as well. Very interesting. They're into making like tools and metamaterials to use making those tools, and they're all about possibly producing these tools and getting other places to help them make the most efficient tools out there of metamaterials, and they're looking to license it. That way they can collect royalties on those products. So that there gets me a little excited on that is kind of their plan on that part of it. So if they can create these tools that are useful for these other industries, they can then license it, collect royalties off of it. That is super exciting. So guys, let's get back to the interview.
Is this protected by know-how or patents, or how is your IP protected?
That's a great question. So we have been deliberate in building an IP portfolio to prepare for future competition and licensing. So together with our recent Interglass acquisition, a Swiss company, we have been able to reach significant IP for process, so manufacturing process, which is about a third of our portfolio, about 150 patents today. The other third is the application development in the different areas, automotive, aerospace, etc. And then there's additional patents like utility patents that are completing the mix. We are developing also strong brands so that they can be further leveraged in licensing. We have, I believe now, 6 trademarks registered, and we're building up our IP portfolio significantly more over the next couple of years.
Okay. And then what's the low-hanging fruit, the addressable markets that can most use your technology?
So from a low-hanging fruit perspective, we're very excited about 5G applications. This is in reference to one of the first mega trends. I don't know if you're aware, but in the world of 5G infrastructure, analysts have mentioned that this is going to be more than a $2 trillion rollout, and to deliver broadband speeds wirelessly, not only in our homes and our offices, but within new vehicles. The demand is requesting for increased ranges and improved safety in the case of vehicles. So with the 5G rollout, we have an opportunity. We announced a partnership with a Japanese conglomerate called Sekisui Chemical earlier this year. And we have a number of prototypes, a number of opportunities to showcase our technology. We have done already a phase 1, and we're moving to new phases in this development.
Okay.
One of the exciting things in 5G, just as an example, AT&T and Verizon spent more than $100 billion this year to just license the frequencies, the spectrum. So you can imagine that has a lot of attention, a lot of people working in that. The second thing is vehicle electrification. So with electric vehicles, metamaterials can also create lightweight applications, and our materials will typically enhance efficiency. So from a windscreen of a car for de-icing, defogging, protecting sensors on the car, whether it's a camera or a LiDAR sensor against the weather elements, head-up displays, so optics. So there's a range. It's about a dozen products that we are looking to develop for the automotive field. Obviously, that's a little bit longer in terms of a sales cycle, but automotive OEMs typically invest in the supply chain, and they want to secure supply chains. And there's, as you can imagine, fierce competition of who has the best technology that differentiates them in the marketplace.
You mentioned one partner. Do you have other partners since you're going after different...
All right, guys, real quick before he gets into partners and other partners and future partners, I just want to recap that last couple minutes. So I took some notes here. Guys, they have 150 patents out here on metamaterials in their products, which is very awesome. They're building that out for strong brands and licensing. Not only that, but they got 6 trademarks right now that are going to be patented out. We also got exciting 5G trends and news coming out. As I said, the government said that's going to be a $2 trillion basically infrastructure kind of deal to get 5G everywhere, not only to businesses, homes, now we're talking vehicles, everything else like that. And they're working on the recent partnerships here right now, and they said how Verizon, AT&T spend like $150 billion a year to license out their stuff. So if Metamaterials can come in and help people get that, get these products off for licensing, that could be super exciting. So let's get back here to the interview and hear what you had to say about partnerships.
Areas?
Yes, we do have partners in the tier 1 level, so Asahi Glass and PPG, two of the largest glass manufacturers. They do glass for automotive, but also industrial glass for high-rise buildings. This is where we can see our products being applied, and some of the large volume opportunities where these companies are known to produce hundreds of millions of meter square of glass, and related applications obviously match our capabilities, and we're excited about that future.
So is this a design-in sale?
From a business perspective, is that your question?
Yeah. Do your products have to be designed into other companies' products?
So we have a library of designs. This is tied to the way that we make and produce our materials. One of the things that is very interesting and different about us is that we have a bottom-up approach upside down. So we basically, instead of inventing a molecule in the way of the chemistry companies do it, they invent a molecule and then they figure out where to apply this. Sometimes by accident, they invent things. Sometimes, obviously, it will take them years of development to perfect something. In our case, we use computers and algorithms that solve equations and create unique metal and plastic compositions. And those at the nanostructure behave so differently that you can program a function into your material. Why is that important? Because unlike the physical chemistry and the competitors out there that take years of development and millions of dollars to develop something new, it takes us one engineer a few hours to come up with 12 different designs that are typically 2 to 40x improvements. Our record today is 40x improvement, and the moment that we show this to our customers, they get excited because they typically, from a chemical perspective, they expect 20% gains. So when you're going in and your starting point is 200%, you can imagine that there's excitement. What happens next is going through a material selection program. They select down out of, let's say, 12 designs, which one is the right one for them. Then it gets transferred to prototyping. That's, again, where we have an edge. Our typical process takes minutes, where other types of manufacturing from our competition takes hours and days to complete. And then moving on to basically qualify these products and then scale them, and depending on the size of the volume, potentially transferring them to those customers. But in all of these steps, we make sure that we maintain our IP so that we can keep growing our library and keep using some of these designs over and over and over. So at the baseline, if you think about it, it's a nanostructured film, and the design pattern on the film can result in different performance characteristics. But we talk about innovation at speed, typically at Meta. We are probably one of the fastest companies out there that can do that entire cycle from start to finish.
So where are you in the process of revenue generation? Do you have products on the market now? Or are you still in the development stage? And if so, what does it take to get revenue producing?
Yeah, so the revenue production is primarily the company was focused in aerospace for the first 8 years of its life. So it's been only a couple of years ago then that we expanded. So we started with, as I mentioned, Airbus, Lockheed, and a few other aerospace companies that I cannot mention as our core customer. That's rapidly shifting now because we have now volume capabilities and new capabilities that we're building. So that composition of the revenue is going to shift towards other industries. What I can tell you is that we have products on the market. We have two types of revenue streams. You may see on our website that there is an e-commerce website where we do what we call retail optics or components off the shelf that people can buy with as simple as putting your credit card and purchasing. Now, the audience for that is scientific instruments and universities and companies that would need those optics. We're expanding our catalog of products and adding more every quarter. And then we have the specialty materials where they are a result of partnerships. For example, with Airbus, we have launched a custom-made laser eye protection product called Mmat Trch, and it's the only product on the market that has been certified by an OEM and approved by an airport authority. When it comes to future revenues, we see a lot of applications coming out of our major product line called NanoWeb, which is a transparent metal. And if you remember, I mentioned indium tin oxide. That was a transparent conductor that we're trying to replace. Indium tin oxide is pretty much in anything that has a need for a transparent conductor, from displays, smartphones, to windows of aircraft and smart windows, electrochromic windows, etc. So very large market application that is about $5 billion, according to the analysts.
Okay.
So from that perspective, maybe Ken can add a little bit more color to the way that we're going to approach the market for the revenue streams.
Yes,
Ken? Sure.
And Ken, in terms of the revenue model, it sounds like you have different models. And can you give us an idea of those and the gross margins?
Sure. We have a hybrid model. Our model progresses, as George said, from early design, which we're compensated at the very early stages with our customers on a non-recurring engineering basis. Mm-hmm. So we'll do engineering services, produce, as George said, 15, 20 different designs for customers while they sort of sort through what they want to do. And sometimes those designs are intended to be an integral part of a product that they manufacture, as you said, the question about design in, or on occasion, and as in, for example, in the 5G, a lot of the product we're making in 5G is add-on, so we can do it either way. That's up to the customer. Those revenues tend to be in the $75,000 to $150,000 kind of range per project. We then progress the customer through sort of inverted funnel, as George mentioned, that said, okay, we start with 20 designs. They narrow it down to 4 or 5 that they really want to prototype in volume and test. So we do that, again, principally on a non-recurring engineering basis. And then we come to kind of a fork in the road. Once they've picked the 1 or 2 designs that they want to work with, we need to scale those designs to pilot scale. And pilot scale in this case may be they want us to make 200, 400 square meters of stuff so they can test it and make sure it works. And then and that is a combination of product revenue and engineering fees. And then finally, we can produce in our facility, which is one of the things we're doing a lot of this year with investment, is we're scaling a pilot scale plant in our facility that, as George said, can produce maybe 1 million square meters over the course of a year on a 2-shift basis. And we'll run their production initially in our facility in Halifax. And then depending on the application and the likely downstream demand, we'll either continue to produce the materials in our facility for them on a per unit basis, or we'll license them a combination of the design technology, access to the machine tools that they need in their own facility to make their own product, including scaling it to the levels that they may want. So it is definitely a hybrid model of a combination of NRE product business, and in certain high volume applications, we'll actually license the technology and the production capability to our customers.
And all right, guys, a couple quick notes that I did take from that interview there where Ken Rice was talking. It's kind of nice to hear Ken. We got from George and Ken there that talking about revenue generation and how they're looking to do that. They start out with aerospace, guys, but they're shifting in different industries now. We know the 5G. They're going into automotive with EVs. So in a sense, they're all about making these products. They told us they're making new products every quarter. I think he said around 12 or so products or so per client. And what it is kind of almost like he said it would be anywhere from $75,000 to $150,000 per project with a customer. What it is, then they hire an engineer to come up with, say, 10 to 15 items for the customer. The customer then decides which one they like or two. Then they build it out into scale. Then they can decide, want to license in it, get it as an OEM product or just keep selling it out, whatever they want to do. So pretty exciting to hear that. We got a little bit of this interview left. Thank you for everyone that's sticking it out. You guys requested this video. I appreciate everyone that's watched all my metamaterials videos. We said yesterday if you wanted to hear this interview, comment below, and you all commented, so we're doing it. So we got 9 minutes left. So let's get back to the interview.
Great. And you mentioned the facility. Is that up and running, or does it require additional CapEx?
This year we're spending probably close to $2.5–3 million on retrofitting a 68,000 square foot facility in Halifax that we expect to bring online in the fourth quarter, and that facility will house all of a lot of our R&D capability, plus a customer training center and our roll-to-roll pilot capabilities, and that will supplement our small-scale prototyping activities that occur mostly in our facility in Pleasanton in California.
Okay. In addition to making it there and potentially at a customer's, are you tolling or can you scale is what I'm getting at? Where are you in terms of capacity?
Yeah, I can answer that. So
go ahead.
The good news on any of the nanotechnology systems, nanofabrication systems are typically fully operated and automated by machines. It doesn't need a lot of people. You don't need PhDs to run them. And you certainly don't need to have manufacturing in low-cost countries because if you have the right process, you can actually create economies of scale with a very small amount of people. So as a result, we can easily scale, and that's why we work with a Tier 1 contract manufacturer who can take our production line and replicate it and duplicate it and multiply it, whether in Canada, the U.S., or elsewhere.
Okay. So currently, who are your customers, either names or generically, and how are you reaching them?
That's a great question. We have a lot of partners and customers. Our business model is primarily B2B. So we seek to work with leading OEMs in targeted sectors, and most of the time they come to us. So for example, in the laser eye protection program, we had both the largest OEMs, Boeing and Airbus, in discussions with us, and we eventually chose to work with Airbus. However, Boeing today is a customer, and so is Lockheed Martin as a partner in the work that we are doing in solar energy. So aerospace has been a great first industry. And moving on to, let's say, for the 5G, I mentioned Sekisui Chemical. These are the types of partnerships that we build along the supply chain, and they have attracted not only significant customers behind them. These Tier 1 suppliers have very large corporations behind them. For instance, Docomo is the largest telco in Japan. And this is public knowledge, so Sekisui's basically work on this 5G attracted Docomo to the table. And then we also have significant government support. So there are several programs that OEMs will partner with us, and that de-risks investments, which have provided a lot of non-dilutive funding for our R&D and scale. There is a page on our investor deck that people can see some of these partnerships that we have forged over the years. Samsung is another notable one where we developed finger sensing technology that was below the display. And we hope that with the additional resources that we now have, strong balance sheet, this is going to help us accelerate a lot of these partnerships and add new ones to the table. We have a whole division of medical applications that we will be talking about in the coming weeks and months, and how we plan to also commercialize some of the exciting medical products that we have.
So you just touched on my next question. So as we look out over the next 12 months, what are some of the events or catalysts that we should look for?
So we believe that Meta is a category-creating company. Over the last 10 years, we have built our team, our IP portfolio, our design and development, and now our manufacturing technology. So the catalyst I think that people should be looking at is the growing number of leading OEM customers and partnerships. We typically get this exciting thing happen. Our partners and OEMs, they like to basically publish these partnerships. They are tied down to an innovation, a product application that is so new that they naturally want to talk about the new thing that they're building. And that makes us happy because we are working with maverick organizations that they have a need to communicate the next generation products. We're not competing with procurement on the bottom against basically other competitors that, are a Me Too product and you're competing on price. We're working alongside the Chief Innovation Office of OEMs, the CTO offices of Tier 1s, and together developing and enhancing their product offering to something that's next generation. So the catalyst that people should be looking out for is, number one, the announcement of our new facility being fully operational. Number two, the certain team build-out that is going to happen. We're adding amazing people in all different departments, including business development and sales. Some are industry experts themselves. And three, the OEM partnerships that I've just mentioned and how exciting those opportunities will be in the future can be characterized by the fact that we choose companies that offer us at least a 50% or more gross margin with a $50+ million recurring revenue opportunity over the next 5 years.
Very good. So before we go, is there anything that you want to add that I failed to ask, or any closing remarks you want to leave us with?
I would just want to say that our mid to long-term roadmap includes medical applications with multi-billion-dollar potential. For example, how do you increase the resolution of MRI scans while reducing their cost and increasing the speed of image acquisition? How do you detect breast cancer and prostate cancer earlier without radiation risks and doing so painlessly? And how do you work in diabetes management, which is supposed to be the holy grail, how to accurately measure glucose without drawing blood, without finger sticks? So the technologies, including some biosensors that allow us to reduce cost and basically bring these technologies out of the hospital or the lab right to the clinic and the point of care, or even into the home. These are something that are very exciting. And obviously, anything in medical takes time, but we are excited about the future and what we can bring that will make and help change people's lives for the better. That's part of our mission, and we're excited to have more Q&As like this. So thank you for the opportunity to talk to you today.
Oh, my pleasure. Thanks, gentlemen, and thanks for sharing the story.
Thank you.
Thank you.
All right, guys. So there was the interview. I want to touch base on that last part they were said. I took some notes here. He asked him about the 12-month events and catalyst. He said that they're really focusing on the growing number of the OEM products, because the customer gets excited about the products that's helping their business, and in a sense, they promote the products that they're getting and where they're getting them from. And where are they getting them from, guys? They're getting those products from Meta. That's right. So if a customer is using the products and their people's all excited about it, they're excited about it, they're selling the products. What did George say there? They have 50% gross margin profit on those products, along with millions and millions of dollars of profit of just recurring revenue of the products once they get them established. So super exciting stuff. A lot of great information there in this interview. Guys, this was a long one. So if you stay here to the end, you guys are the best, man. Guys, I want to say thank you to everyone that joined the Patreon. I think we have 2 members in there now. We're going to get a few more. So looking to grow that Patreon group, have a great community in there. You can chat with me in the Patreon group. It's like the first or second link in my description of the videos. I'll try to put it down in the pinned comments. Be careful of those scammers out there. Don't do anything with the scammers. I don't have a WhatsApp or any of that, guys. There's links in my description. You see a pinned comment of me. That's the only thing you want to do is just stick clear, guys. So hope you all enjoyed today's video. If you did, smash a thumbs up. Check out the links down below, and I'll catch you guys in the next one. Peace.